Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Andrew McCormick, head of eToro US, Tom Bruni, head of market research at StockTwits, and Jay Jacobs, head of Thematics and Active ETFs at BlackRock. We're here to discuss the main challenges retail investors and traders faced in 2024 and what they're doing to manage their portfolios. Gentlemen, it's great to see you. Welcome back to Trade Talks, and let's go around the horn here quickly. Andrew, give us an idea, you team, where you fit the ecosystem here.
Yeah, so great to be with you all today. My name is Andrew McCormick. I'm head of eToro US, and eToro is a global investment platform in over 100 different countries where we try to get users to access capital markets in really simple and engaging ways.
Tom, tell us about the work you're doing at StockTwits.
Yeah, so StockTwits is the largest online community of investment traders. So it's the place where real-time conversation around markets takes place. We've got over 8 million users, and my role at the company is to kind of distinguish what's happening on the platform and provide insights that will help them make better investment decisions.
All right, and we know what BlackRock does, but what about your role?
Sure. Well, we're the world's largest asset manager, but we are really focused on bringing out ETFs that help investors have more choice in how they approach the markets and be able to position their portfolios to achieve their financial objectives.
So let's talk about your perspectives here for a moment, because believe it or not, we're nearly 5 years away from 2020 when the pandemic had started, and there's been a lot of changes in retail investing and trading activity. From your perspective, what do you think has changed and what has stayed the same?
Well, one of the biggest shifts we've seen is just the growth of ETFs, exchange-traded funds, with retail investors. This is the third fastest growing product after basically cash-like products where people put their money and get some yield, and buying single stocks. So after that is exchange-traded funds, and what they do is really provide diversified baskets for investors to really efficiently access different parts of the market. Now, what's really shifted and why there's been so much growth of ETFs is investors really want to get diversified and build portfolios to achieve their financial objectives. Sometimes that means really targeting some large, well-known companies like what we have with our Top T ETF, which is the top 20 companies in the United States. Really just a very simple basket of well-known kind of brand name companies. Or it's people trying to enhance income so that they can generate more dividend yield or maybe kind of live longer in retirement with more income, which they could achieve through covered call strategies. So really different ways people can use ETFs to achieve those financial objectives.
Yeah, and your thoughts here, because you really are hearing from the crowd in terms of investor behavior and different trends that they're following.
Yeah, I think the biggest thing that's changed over the last 5 years is kind of Wall Street and the media's attitude toward retail investors and traders. I think during the, in particular around the meme stock saga, we saw a lot of people enter the market and we thought they were going to be here for a short time, and then once the world opened back up, they would kind of forget about investing together. But we're seeing that there's a massive shift in kind of the culture around money, and people are talking about it more. People are being more proactive with investing and managing their money, and looking for communities like StockTwits or products from either eToro or BlackRock to help them kind of navigate that landscape.
And Andrew, I think it's a point that Tom brings up, because that are available for retail investors that certainly did not exist even for institutional investors, let's call it 10, 20 years ago. So platforms such as eToro, it really is changing the game for retail investors.
Yeah, absolutely. First, it's crazy that 20 years ago,
right?
And it was a chaotic time. I think one of the amazing trends that came out of that was just this loud awakening of the retail investor, and it's been wonderful to see that continue for the past 5 years. Every year Nasdaq and other institutions publish their trading statistics, and those numbers keep going higher and higher, and they're way higher than they were pre-pandemic. And even a few weeks ago, SEC Chair Gensler gave a speech where he talked about 58% of American households are investing in stocks. That's up from 53% just a few years ago, and 58% would be the envy of the world out there. At the same time, I think that shows us we have a ton of opportunity still to go. There's that 42% out there that's not involved in the market, and so all of us in our different platforms have some great opportunities to reach out to investors, provide new tools and educational resources, and simplify, and excited about that future ahead. And it's also cool, similar to what Jay was saying, the explosion of ETFs in recent years is a powerful diversification tool. And it's cool to think in 2020, like a lot of people flooded into the market because of meme stocks, because of crypto, the big tech names. And what's cool, they actually have stuck around, and more keep joining the party, and now they're more traditional investments and diversifying and go into ETFs. And it's probably why we see BlackRock breaking records, each quarter.
Well, I mean, it's a point that, you're head of thematics here at BlackRock, being able to get exposure to these themes. We weren't talking about Gen AI in 2020 like we were in 2022 and moving forward, or even these niche themes that would either be too expensive, you don't have the research team to help you pick these stocks, manage the portfolio, but through thematics and the liquidity that you get from BlackRock, you have a good opportunity to trade along.
Absolutely. We find, and I love that statistic, that almost half of investors in the world, half of Americans haven't been invested in stocks. That means there is so much opportunity. What we found in digging into that, like why is that 42% not investing? They don't know where to start. And so oftentimes people have an idea. They have an idea that they want to invest in companies they know, or they want to invest in AI companies, or they want to invest in Bitcoin, but they don't really know where to start. And where I think ETFs have really provided so much value to investors, particularly on the retail space, is making it so easy to get access to an idea with the click of a button, being able to buy that ETF that gives exposure to 30, 40, 50 companies in a specific theme like artificial intelligence, where you don't have to do that research, but you're getting that kind of institutional grade diversification and basket construction to play that theme.
Yeah, and Jay, Tom, I'm sorry, I mentioned this at the top, that there's challenges that are facing retail and investors and traders. Well, the S&P hit 6,000 the other day.
Yeah.
What kind of challenges are they facing? Because when you take a look at the market and perhaps how your 401k has been performing, doesn't look too challenging at first blush.
Yeah, I think in today's day and age, the problem is not access to information. It's kind of the filters you're using and how you approach the markets. So our co-founder, Howard Lindzen, likes to say, there's no such thing as information overload, there's just filter failure. And so I think that's kind of been an issue for new entrants to the market. They have all this access to these new tools and research and ideas that they've never had access to before. And figuring out how to navigate all as a beginner can be overwhelming. And so platforms like StockTwits and others are doing the work to kind of curate the right information, the right kind of approach for people so that they can come to our platform and find exactly what they're looking for. In particular, in 2024, I think the bigger theme is that a lot of people were expecting a lot more volatility because of the obvious events. We had the election, we had the soft landing, we had what was going on with the global economy and geopolitics. So there were a lot of reasons to be kind of negative on the market, and yet here we are at all-time highs. So I think it's a challenge for people who look at all those headlines and don't really understand the disconnect between, stock prices at all-time highs and a lot of reasons to be potentially cautious.
Yeah, well, it's interesting that you bring up there's uncertainty in the market. We saw one of those big pieces was removed just last week, and you saw how the market reacted to that. Andrew, both eToro and StockTwits, social media, of course, is embedded into the platforms. How do different generations and demographics of investors and traders use tools like social media and other content to support their journey through this?
It's a huge resource. I mean, even thinking of my own life, whether it's looking for recipes or vacation ideas or parent suggestions, always going to the internet, social media, looking for ideas. What we found in some prior surveys that over 80% of investors are going to their social networks to looking for advice, inspiration, ideas, people to follow. And that's the true heartbeat of eToro and StockTwits, where here at eToro you can read and research and see what other people are doing around the globe, and then make your own investment decisions on the same platform. Now the generational distinction is interesting, right? So what we found in some prior studies is actually Generation Z, our youngest investors, who are doing the most research. And I love when people break stereotypes, and I would probably break stereotypes, but it's not just traditional reading research reports or technical charts or publications, but it's watching the videos, the how-to guides. But it's Gen Z who's digging in more when they're investing. I think something I find really interesting in the topic of who is talking about investing the most, it's again Generation Z who says they're the most comfortable talking about their investments in a portfolio. I think in our latest survey, it was 59% of Gen Z feels comfortable talking about the portfolios. In comparison, baby boomers were less than 30%. So in a few weeks at Thanksgiving, if you have some Gen Zers around your table, they're probably going to bring up investments. And I think that's a nice and natural and healthy, evolution of people just being more comfortable talking about financial markets.
Well, I also think it helps them to understand broader themes within the economy and society in general. And sometimes Gen Z a bad rap because exposure that I have through them, whether it's presenting at different universities or having to market site, they are so inquisitive and definitely way ahead and much more smart than I ever was, like in that 18 to 23, 24-year-old range. I just love getting their perspective. And I was overseas for the election, and getting that perspective from Gen Z from a totally different demographic was a fascinating learning experience for me. Speaking of big events this year, Jay, you know, the approval of the spot Bitcoin ETFs, that was a big catalyst for the digital asset space. And I also think because in that ETF wrapper that investors are comfortable with and know, that was big in terms of getting more. I mean, Bitcoin and digital assets was part of the national election discussion.
So I think it's really, we've seen tremendous growth of the Bitcoin ETFs, and IBIT is now well over $30 billion in assets. It's the fastest growing ETF of all time. And I think it's coming from two different places. One is people who already understood Bitcoin, had an education on what it is and how it fits in a portfolio, really just look to the ETP as being a better structure for getting exposure to it. You could buy it on an exchange. You could get very good liquidity, trading at penny-wide spreads. It could sit alongside your stocks and bonds in a traditional brokerage account. It simplifies things like tax reporting. Just, it's the vehicle of choice for a reason. ETFs are just so efficient, and it's no different with Bitcoin. So a lot of people are switching from other ways they were getting exposure to Bitcoin to the exchange-traded product. Now, the other group, which is kind of the longer-term kind of interesting opportunity here, is people who just started their educational journey on Bitcoin when these ETPs launched. Because previously, maybe they didn't have any way to buy it, so they didn't feel like they needed to kind of start this educational journey. Now they've started it, they're learning how Bitcoin can be a geopolitical hedge against rising geopolitical risk. They're learning about how it could be a monetary hedge against things like debasement of currencies and rising inflation. They're learning about how it can be a diversifier that just behaves very differently from stocks and bonds in a portfolio. We know that takes time, but these are going to be kind of the new people to the Bitcoin space. And I think the combination of those two buckets are what have driven such a large and fast growth of Bitcoin ETPs this year.
Yeah, especially when investors are looking for alternative investments within their portfolio. Kind of alternative bucket with Bitcoin and other digital assets. Who knows when these ETFs get launched, but in a familiar way.
Yep.
So if you're a traditional retail investor or an advisor, because iShares is widely used among the advisor community. I think it's a smart way to at least get your foot in the door, if you will.
Definitely. And say familiar, but also a liquid way too.
Right.
I mean, so many alternatives, people don't have the path to liquidity. Bitcoin trades a lot, and the Bitcoin ETFs trade a lot. So it's just a way that people can do something very different from stocks and bonds, but you can still trade on a regular basis.
Yeah. Let's talk about education and fostering investors on both of your platforms. Tom, when you think about your approach to education and where the areas of opportunity are, one, how are you, and what demographics or what areas within the market do you see the most opportunity?
And I think this ties into your last question pretty well too. So in terms of how people interact with social media, they're all looking for the next idea, right? You're on social media, you're involved in the market because you're here to make money, and so they're looking for their next idea, the next person to follow, the next insight. And so regardless if you're someone older that's on StockTwits or younger, we find that there's kind of like a gap between how people use the platform. So if you're younger and super active in the market, maybe you're actively trading, you're on the site 24/7 looking for those real-time insights, user-generated comments. But if you're kind of an older investor that takes a longer-term approach, you're consuming the same content, but through our newsletters, through our news service, through other verticals that are a little more approachable. And so, right into your question here, the opportunity in education is to meet people where they are. And I think this is why we've seen such a proliferation of content across TikTok, YouTube, verticals, because people are hungry for this information, but we all learn differently. And so the opportunity for StockTwits or eToro or BlackRock is to kind of productize or package the information that we know people want and are searching for, but in a way that is most accessible to them on these various platforms.
Well, I mean, look at the way they consume news and media in general, right? It's not simply off of what broadcasters are telling you have to watch, but even sports. I think for the most part, it's streamed or it's accessed in a way than you would traditionally think it was. But Andrew, I think you also address how do you balance, in terms of protecting investors, what they hear on social media, what they might, pick up from someone who has, a great track record that you see on a platform, but maybe they trade. How do you balance out educating your investors on the platform with the content that's being passed along?
Yeah, so it's important to have a wealth of resources and options for people, right? So at eToro, we're proud of, whether your experience level, your interests, we have lots of different options. Whether you want to watch videos, there's videos. If you want to just read reports, there's reports, look at technical charts, tons of different options. A big part of what we believe in is practice. So at eToro, you can start a practice account, a virtual account, where you're doing trading, you're learning about trends, you're doing your research, but it's all make-believe money. It's real money. Your capital is not at risk. We also are proud of the fact that you can make investments for as little as $10, right? So you don't have to put a ton of chips in the table. You can take little bite-sized steps on your investment journey, and at eToro, we're passionate about transparency. So if on our platform you see someone talking about a certain ticker symbol, they love it, you should buy it, and here's all the reasons, you can actually look at the portfolio and see if he or she actually holds the investment and see how they're trading it. And I think that's really important. There's so many great resources out there, but there's also like some shady characters in our world, unfortunately, and having that transparency coupled with educational resources as well as practice, I think is a powerful journey for retail investors.
And as we wrap up here, I want to get all of your thoughts on this. Andrew, we'll kick it off with you. We're, believe it or not, in the final quarter of the year. What's next in retail? Where do you think the focus is going to shift or continue on its trajectory in 2025?
Yeah, so I think three quick areas. I think financials, technology, and Bitcoin. I think the regulatory environment will probably be a little more friendly to financials and technology. Interest rates will help as well. The story of Bitcoin in 2024 is incredible. The journey it's been. We've seen huge institutions get into the space. I think next year we're going to see more and more corporations buying Bitcoin, more and more countries buying Bitcoin. And so whether you're a believer or a skeptic, it's an important asset class that you should pay attention to. So I think it's going to be a big year in 2025.
Yeah, especially if we get some regulatory framework around that with the scale that the U.S. has to offer, then things start to really look interesting for the space overall. So, Tom, from your perspective, how do you think 2025 shapes up?
Yeah, I think overall sentiment right now is that it's a bull market. Obviously, a lot of things across the board are working, but there is some concern around like valuation and kind of like black swan type risks. People are trying to figure out what the next risk that nobody is talking about could be. But we're seeing people take kind of a core and explore type approach to their portfolios. So they have their core holdings, they've got the lowest cost index funds, they've got kind of the broad-based beta exposure to the market, but then they're using 20-25% of their portfolio to go out and kind of swing for the fences. So I know AI and NVIDIA and all these names have been kind of the focus for 2024, but heading into next year, we're seeing a lot of focus on areas that could potentially play catch up. So any sector or individual stock that hasn't quite made it back to its 2022 highs is a big focus area. So within financials, like SoFi is a popular name, the biotech ETF, XBI, the retail ETF, XRT, a lot of these types of symbols that haven't quite made the same type of move over the last year and a half is where people are looking for opportunity.
Right. Core and explore, I'm going to hijack that term, that's a good one. And Jay, to wrap up here, your thoughts into 2025?
I think 2024 was largely a story about artificial intelligence and geopolitics. I think that actually continues into 2025, but the underlying drivers are going to be a little bit different. So what's different? We're going to be in a rate cutting environment rather than the last 3 years where we had rates rising or being flat at very high levels. That's going to support names that previously have been beaten down. You're mentioning biotechs. Biotechs could really benefit from a falling rate environment. The second is how public policy is going to shift. We might, we're going to have a new administration, we're going to have new politicians across the board, and there's a lot of focus on things like infrastructure in the United States and manufacturing in the United States as we really kind of embrace this reshoring and building in America. And the third area that we're looking at is just how AI is going to continue to advance. So this coming year, we're seeing more powerful chips, we're seeing bigger data centers, we're seeing new large language models coming out. This means AI, what we kind of got used to in November 2022 when ChatGPT came out, is going to be much more powerful next year, and I think we'll see a lot more adoption because of it.
Yeah, and I throw in cyber for that reason as well.
Absolutely.
All right, gentlemen, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.